Ladies and gentlemen, good day and welcome to Q2 FY23 earnings conference call of Sterling Tools Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vijay Gyanchandani from Essential Technologies. Thank you, and over to you, sir.
Thank you, operator. Good morning, everyone. Welcome to Sterling Tools Limited Q2 FY23 earnings conference call. From the management, we have today Mr. Atul Agarwal, Full-time Director, Mr. Jaideep Wadhwa, Director, and Mr. Pankaj Gupta, CFO. Now I request Mr. Pankaj Gupta to take us through the key remarks. After that, we can open the floor for the Q&A session. Thank you, and over to you, sir.
Good morning, everyone, and thank you very much for joining Q2 FY23 call. I hope this presentation, which we have put in the BSC, you have gone through that. Still, just as a few key numbers to take away from this quarter. We had a sales turnover from fasteners business of 155 crores in this quarter, aggregating to 293 crores of sale in 6 months, which for fasteners business is all-time high, what we have achieved. Q over Q, this is about 20% higher as compared to last year. Our electric vehicle business, we did 25 crores of sales. Half-yearly number reaches to 62 crores. Again, we are on track with our target for the year on EV. On a group console basis, the quarter number is 180 crores of turnover, with the half-year number reaching to 350 crores. As we shared last time, there is a delta improvement in the margin in the fasteners business by about 110 basis points. EBITDA margin stood at 16.7% for this quarter. And as we shared, a lot of efforts from management in terms of cost control, etc., has started seeing the impact in Q2, which we should continue in Q3 and Q4. And overall, a good quarter and a good half year for us. Exciting time ahead. I will request Mr. Atulji to give more insight on the same.
Good morning, everybody. Like Pankaj said, we've had a good second quarter. I would say a good first half. I would like to talk about the first half more as a consolidated number, because that gives a truer picture as to what our trends are looking like. So our fastener business, like Pankaj said, we are up 34% in revenue for the first half on year-on-year basis. On the fact, I think we have done some great operating work across the teams in our company. We have done on a consolidated level, half yearly we are at about 350 crores odd. Our EV revenues are about 17% of our total revenues, and I think the guidance we have, we believe it will be close to 20% for the full year. So we have had we are on track with our plans for our EV business. I think we are looking at a multiple X growth in our revenue from last year, since we had only 1 quarter of operation. Just a couple of other highlight numbers. Our EBITDA levels are trending upwards. Quarter on quarter, we are improving our EBITDA levels. And we believe for the full year, our EBITDA levels will be much more respectable than what we had last year, because last year was a tough year on account of inflationary pressures, but we've been able to work around with our customers and internally in our cost structures to bring our EBITDA numbers back to a more normal levels we are used to. We've had tremendous success going back to our electric vehicle business. We've had tremendous success in that business. We believe, according to our estimation, we have nearly 50% market share in the high-speed scooter segment and about about 33% in overall two-wheeler, e-two-wheeler segment. On the back of some great customer acquisition, and some of our customers have ramped up volume substantially. There was some concern in Q2 in a couple of months, but I think we've been able to overcome that and ramp up the volumes substantially. Our EV business, despite being in a startup phase, is EBITDA positive and PBT positive. So I think that speaks volumes of the kind of value addition we are doing to that product for our customers, and the market leadership position we have in that particular segment right now. We've also had success in our EV business in new customer acquisitions. We have acquired customers beyond the two-wheeler space. We have acquired customers in the light commercial vehicle, last mile delivery product range. We have acquisition of customers. We acquired customers in Switch Mobility, which is part of Ashok Leyland. We acquired customers at Mahindra & Mahindra. And also, just recently, we also acquired the business at Volvo Eicher for the last mile delivery products in the 1 to 4 ton category of last mile delivery. So we now, riding on top of our success in our two-wheeler customer acquisition, we're also finding we are making penetration in the segments of last mile delivery and LCV segment also. We have invested substantially. We invested substantially in our engineering capabilities. We have a large team. Our tech center in Bangalore is being ramped up. So a lot of capabilities are being added in our engineering capabilities, both hardware and software. We believe that's the backbone of what we're trying to do, and that is also allow us to have a more strong position vis-a-vis our customers, our cost structures, our profitability structures, and will help us in new customer acquisition. We are also investing as per plan on our manufacturing capabilities and capacities for our EV business. And we are also keeping in mind long term, we are currently under study as to what we need to do in terms of investments in the next 12 months, keeping in mind the visibility we have for our business for the next 3 years. So we are still internally debating as to what we need to do. We will keep we keep the investor community updated as soon as we have a more definitive plan going forward. But we are very positive of our EV business. Like I said, it will be about 20% of our revenue this on a consolidated level for this financial year. But next financial year, we probably top this number of 20%, maybe going up to close to 30% going forward. So our EV strategy has played out well for us and is giving us good results. I'm going to Jaideep, I'm going to leave it to you if you want to make any more comments on the EV business, please. And then after that we'll open the floor for Q&A.
Yeah. No, I think Atul, you've captured everything very, very nicely there. I think the only thing I would mention is that if you look at the penetration of electric vehicles and the basis, which is the core basis of our business plan, I mean, it's actually progressing faster despite COVID, despite all the other macro events that have happened. So we are very bullish about this. We continue to invest, and we hope to see good returns despite the challenges of a new business and a new technology.
Excellent. So, Vijay, we can open the floor for question and answers, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Chirag Setalwat from HDFC Mutual Fund. Please go ahead.
Good morning and congratulations on a great result and the fantastic performance in EV. Actually, my questions are in the non-EV business. If you could highlight the first half and the outlook going forward in non-EV, that would be helpful. So that's my first question. On EVs itself, I missed a few numbers. You mentioned a 50% market share, and then if I get it right, you mentioned a 33% market share. So if you could just clarify what that is exactly. So those are my two starting off questions.
Chirag, let me answer the second question first. The simpler one is that when we talk about 50%, in e-two-wheelers, in scooters, there are two segments. One is a low-speed segment, one is a high-speed segment. And so we were talking about the high-speed segment where typically the speeds are 60 kilometers an hour more, 60 kilometers an hour or more, going up to 100 kilometers an hour. And the range is up to 150 kilometers also. So in that segment, we believe we are at about 50% market share. And there's that low speed segment, which is typically where Hero Electric operates and which is average speeds. When I say low speed, we mean scooters which have an average speed of 25 kilometers an hour going up to 40-50 kilometers an hour. Because these low-speed scooters, I believe, do not require registration. The costs are a little lower. In that, we don't have much presence in that segment. We are more in the high-speed scooter segment, which is the larger segment going forward. So when we said 50%, we were talking about high speed, but keeping in mind the total registrations of e-two-wheelers, from that perspective, we are at 33%. So I hope I'm able to clarify on that question. Going back to your first question on fasteners, we are about 34% up in revenue first half. I think we are on track. We are looking at, like I promised in the call last quarter, we did about 470 crores of revenue in our fastener business last financial year on a full year basis. I think we are on track to give you a 20-25% growth on that for this financial year. That's the visibility we have for our business second half. So we are on track. We had a strong second half last year. That's why the overall numbers may look a little lower than my first half growth of 34%. But I think overall for the full financial year, that's the guidance we would do on numbers.
And if we were to look at beyond FY23, I know it's difficult because some of the underlying businesses are cyclical in nature, but if you could just highlight what you think can possibly happen over the next couple of years, the kind of investments you're making, the focus area, this is specifically in fasteners. So essentially to give us a little bit of a roadmap beyond FY23 for the next couple of years in terms of what could possibly happen.
So, if you had asked me this question 3 years ago, I would have given you a very definitive feedback as to what's going to happen in FY24. But we find that the business environment is changing so rapidly every half year, every quarter. Numbers, what I predict this quarter may not be relevant for next quarter because the industry is changing all the time because of various factors of inflation, economy, interest rates, Ukraine war, etc., etc. So there's the predictability of forecasting something on a definitive basis is very difficult. But having said that, for FY24, from our resource availability, I think we have done substantial investments this year and the previous years. So we don't need to do much investments on a capex basis to ramp up our sales revenue. So I think we'll have to do a marginal capex going forward. But all going well, I think we are looking at another maybe about a 15 to 18% growth next financial year. And
what is the current capacity utilization in fasteners?
That's a long conversation because there's a large science to our. In a nutshell, I can say our capacity identification firstly, before I come to utilization, is dependent on the product mix. For example, a machine is capable of making a small diameter part, say let's say M6 into 20 millimeter length, weighing 22 grams. That same machine is also capable of making a M8 diameter part with 50 millimeter length, weighing maybe about 70-80 grams. So the capacities can vary on that sense. It's a function of the kind of raw material we're using, which impacts the recipe time in our heat treatment processes. So it's a combination of a product mix we employ, but on a current basis, I would say we still have headroom we still have a lot of capacity based on the current product mix on an optimal basis to go to a revenue of about 800 crores.
Perfect. Very helpful. And last question from my side. From a profitability standpoint, you've done a fantastic job. So where do you see profitability sustaining, and what has led to this improvement? If you could give us some picture in terms of the initiatives that have been taken so far.
So firstly, we've been able to get compensation from our customers on steel price increases, which there's a lag period to that. I think that's what you saw dip last year in our margin structures. We've been able to work with our customers. We've been able to focus on focusing on a product mix and focusing a lot more on our high value parts, which have a little more complex engineering structures. So we are able to work closely internally and with the customers. Thirdly, we've been able to, automotive business is a year-on-year exercise of getting more efficient in terms of manufacturing processes and also looking at our cost structures all the time. And finally, lastly, I think we've been able to try and convince customers of giving us some cost compensation on costs going on account of energy, chemicals, oils, tools, etc., etc. We've been able to convince customers to give us some compensation on this. Just a variety of initiatives we have taken and to normalize our margin structures.
And sorry, just a very last question from my side. If you were to look at it much longer term, not the next couple of years, but if you were to look at it sort of over the next couple of decades even, and right now you are in essentially two businesses. Over a period of time, when things stabilize, would you like to get into other businesses other than just the MCU and EV and fasteners? I know this is enough to satisfy you for the next couple of years, but when you sort of eyeball what is going to happen, on a greater time frame, is there something which is there at the back of your mind or otherwise in terms of what you would like to get into?
Yeah. So Jaideep and I are working on, I think we have a good EV success story in our motor control unit business, but we are not going to rest on that. The auto industry is changing dynamically very fast, so we need to protect our future, which means we need to add more components in the EV supply chain, and I think we are looking to identify more products in that particular segment of the business, which we believe the penetration of EVs across all segments will go up, as we believe it has and it will, and we will be identifying more products as we go forward. In fact, Jaideep is already working on some, and we'll update you as soon as we have a little more news as to what we are trying to do on that.
And who is the current competition in MCU for in both high speed as well as low speed?
Jaideep, you want to take that?
Well, the current competition is Hella, who have a product here, a company called Brose, Anand Mando, and Bosch, who've been there for some time. Those would be the ones who probably have made the most impact. But there's just a slew of competitors who want to enter into this field. Everyone wants to try. We believe that there is a learning curve, there is a software maturity, and a vehicle integration and vehicle architecture experience that is crucial, that will serve as barriers to entry for some of the people for quite some time.
Could you indicate which are the other products in EV? You mentioned you'd be doing other products as well in terms of what is at least on the table in terms of what you're evaluating?
I think it would not be. if you look at an EV architecture, there's very little in terms of components. You have the chargers, which can be on board or off board. You have the battery management system and the battery pack. Then there is obviously the motor control unit, the motor, and then the DC converter and the auxiliary drives in the case of larger vehicles. And then, of course, there's the cabling, etc. and the thing. So that's pretty much the entire EV ecosystem. We are looking at opportunities in all of these areas. For us, what we are, I can't get into the details because it won't be correct. It would be too premature at this stage. But I can tell you that we are looking for opportunities where there is some level of differentiation, either where we have software as a differentiator, where it's just not a hardware build, but there's also a software component to the product, or we're looking for areas where there is a technology differentiation, and so it's not just there is a new technology that either offers a supply chain advantage or a technology advantage. So, within this, we're looking at all of the areas, but we're just trying to find something that allows us some differentiation.
Yeah, just to add to what Jyoti was saying, we're looking at products where we are not just a screwdriver company. We just want to add a lot more tech, a lot more layers of competence, technology on top, and so we're able to work with customers on a deeper level and a long-term level, and also enabling growth and margin structures.
Sure. And to my earlier question, in terms of profitability, do you see margins sustaining at these levels, or considering that RM prices have come off a bit and you've managed to push through price increases, is there a possibility in the fasteners business of profitability rising from here?
I think if you look at the last 5-7 years numbers of Sterling fastener business, I think our EBITDA levels have been normalizing between anywhere, depending on the year, between 16 to 19%. I think so. My guidance would be we'll be within that range going forward. That's my internal vision is. We need to go back to those numbers and try and achieve them on the higher end of the range I spoke about.
Perfect. Thank you very much. I'll get back in queue. Thanks again. All the best.
Thank you.
Thank you. The next question is from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Thanks for the opportunity, and congrats for this set of the numbers in a tough time. Sir, how much increase in overall volume in the first half FY23 in the fastener business?
Can you repeat that question again, please?
Sir, how much increase in overall volumes in first half FY23 in fastener business?
22%. Volume growth is 22%. Overall growth is 34%.
Okay. And what sort of the impact do you see in the top line due to the fall in the steel prices? I mean that as the steel prices has gone down by the 25-30%, then that will impact the overall net ASP of the company.
So, firstly, steel prices have not gone down by 25-30%. We don't buy commodity steels. We're buying low carbon alloy steels. So our prices have not fallen. I think not more than, to my sense, but 5, 6, 7%. So that is not there. That impact is not there. Yes, we have factored that impact of that fall, but not to the extent of 20-25%. So having said that, we've had, if you look at the big numbers, we are up 22% in volume, 34% overall, and that extra 10-12% is not on account of steel only. It's also, yes, on account of steel price increase, but it's also on account of we are trying to improve our products mix year-on-year basis to do more high-value parts.
So during this quarter, we have seen an improvement in the mix because higher revenue growth from the CVs and the passenger vehicle side. So in that case, also that realization has gone down by the 12% in the first half.
No, I'm not able to understand that question. I don't know what numbers you're referring to.
Sir, my question is the revenue mix is improving right now because we are getting a revenue of around 24% in the passenger vehicle segment, and our CV is around 22%. And overall revenue contribution from the two-wheelers is going down. In that case also, our realization is going down.
No, it's not. No. That's our realizations are not going down in our changing of product mix. So just to clarify, we have a very keen on our realizations, and despite the product mix changing for reasons of growth and slowdown in the two-wheeler segment, we are not two-wheeler segment is not. I think we look at the mix of the business, and as a mix of the business, our realizations are still healthy. There is no drop in realizations.
And how is the mix for the special versus standard fastener in the first half?
Say it again, please. आपकी आवाज कट रही है, थोड़ा clear बोलेंगे आप सर?
How is the mix for the special versus standard fastener in the first half?
Okay, I think our specials. I think if you refer to our past calls, our specials are in the range of about 33-40% of revenue, and we can't do dramatic changes of going to 50-60% so quickly. It's a ongoing process. We look at small needle movements every quarter on quarter, but on a long-term basis, our objective is to take it up to 50%.
Okay, sir. And this quarter, other operating cost has gone up slightly. What is the reason, sir?
No, those are inflationary costs going up. Like, for example, energy has gone up dramatically. And secondly, energy for us is a combination of power coming from the grid and what we generate with our diesel generating sets. The costs we have incurred on energy because diesel costs have gone up dramatically for two reasons. One, the underlying cost of diesel per liter, but also availability of power in the months of June, July, August was not as high as last year. I think there were a lot of grid failures / load shedding, that's one. Then costs across a lot of our consumables we use are fossil fuel based. For example, the chemicals we use, the coating facilities we use, coating chemicals we have, etc. A lot of them are fossil fuel based, so they have also gone up. And the tool steel, etc., they have all put pressure on our cost structures.
Sir, next question is from the non-fastener business. So during this quarter, we have seen around 25 crores kind of the revenue from the MCU business, which is down quarter-on-quarter basis. So what is the reason of low revenue despite the strong growth in the two-wheeler electric scooters in the second quarter?
So I would like to, I think, let me just, Jaideep, I'll give it to you, but I just want to, make one statement. The e-two-wheeler business has been strong only in the last couple of months. If you see the registrations, the e-two-wheeler registrations were weak for 2-3 months in the middle for various reasons. So I don't think our numbers have gone down vis-a-vis the industry growth of e-two-wheelers. I think, like I said, our market share has only gone up. And Jaideep, I'll leave the first part of the question. Why is our revenue lower in the second quarter? Yeah.
I think, yeah, exactly. So I think, you have to look at the electric two-wheeler business as a combination or as a, by the segment. You've got the low speed and the high speed. We have a predominant market share in the high speed. And we had two impacts there. We had slightly lower volumes in the high speed. And with the new safety norms that the government launched on battery packs, there were delays on most product launches and on the sales of the product. So that really impacted revenues for the high-speed segment in the second quarter. What you saw being sold a lot of, where the sales were coming in, was in the lower segment, which is the low-speed scooter. And as we've discussed, I think in the past calls, and you may have been there, is that the value of the MCUs in the low-speed scooters is anywhere between 1/3 and 1/4 the price of our MCUs for the high speed, the ones that we specialize in. So no, I mean, if you looked at a value of total MCUs sold, and you looked at our share did not drop.
Oh, great, sir. So your guidance would be intact for FY23 of around 150 crores kind of the sales from for FY23 from MCU?
Yes.
Yes. Yeah. I mean, I think that's a very strong yes. I won't say more than that.
Okay. And how much current order book in this segment in two-wheelers and LCVs, sir?
Well in excess of what we need to get to 150.
Sorry, sir.
Well in excess of what we need to get to 150.
Sir, I'm talking about the order books.
Yeah, that's what I'm saying. We're covered for FY23, and we've got very strong coverage for FY24.
And is there any differences in the realization of MCUs of two-wheelers and LCVs?
Sorry, could you repeat that, please?
So what is the difference in the price of the two-wheelers MCU and the LCVs MCU?
So again, depends on, there's a lot of power ratings, but on a minimum, an LCV MCU would be 6x of a two-wheeler, at least. Could be even higher.
Okay, sir. Thanks, sir. That's all from my side.
Thank you.
Thank you. The next question is from the line of Manish Oswal from Nirmal Bang Securities. Please go ahead.
Yes, sir. Most of the questions already been answered. I have one question. You were talking about the price action because of the commodity.
Mr. Oswal, but there is a lot of disturbance from your line.
Hello.
I would request you to please rejoin the queue.
Sure.
Thank you. The next question is from the line of Anmol Grover from Albatross Capital. Please go ahead.
Hello, good morning, sir. Am I audible?
Yes.
Yeah. So congrats on a good set of numbers and thank you for the opportunity. I have two questions, both are on the EV business. First question is, what is the capacity utilization in EV as of now?
There is fluctuation month to month, but we are less than 50% right now.
Less than 50% right now. Okay. And my second question is, I know you actually emphasized on it a bit before, but I'm giving it a very short. Can you give a roadmap on the new products in the EV space?
So, I think I addressed a part of this a little earlier to say that, look, we are looking at all of the power electronics and other components in the EV segment. I think as I was looking at my notes and going over, I think the one area that I can share with you is that we have had initial success on DC-DC converters and auxiliary drives for commercial vehicles. So that's something that we've already entered into and we're able to do, and we've had some good success initially. So that's one part of it. But like I said earlier, that we continue to look for areas in the space where we can differentiate ourselves through hardware or through a technology that sets us apart from other players. And the number of components in an EV, as all of you are aware, are limited. So it's within those that we are investigating optional. We're looking at different technologies and what the options could be.
Okay. So can you share anything further on the auxiliary drive for CV where you had success?
So this is very interesting. I mean, I don't want to get into an operational thing, but it's a very interesting application. These are actually being sold for mining trucks. If you think about large commercial vehicles, buses, trucks, etc., these require, they have a bus voltage of 300 volts or 500 volts or whatever the voltage, the architecture is being decided upon. That needs to be stepped down to 48, 24, 12, as the case may be, to drive things like the lights, the horns, the music system, things like that. The things that we currently use lead-acid batteries for in vehicles to power. So that's what the DC-DC does. It takes the it's that part of it, and then the auxiliary drives are that you need on these large vehicles. You need air compressors, you need pumps to drive steering motors, and so on. And so the units that we have supplied are units that A, convert the power into a lower voltage, B, they drive these air compressors and pumps so that the systems on a vehicle can be managed.
That's interesting, sir. So that's all I have. I'll get back in the queue. Thank you.
Sorry?
That's all I have. I'll get back in the queue. Thank you.
Thank you.
Thank you. The next question is from the line of Rajesh Jain from NB Investments. Please go ahead.
Good morning. The first few questions are on the EV. You have already mentioned about clear visibility for this segment for the current year as well as for the coming next year. Would you mind sharing what is the quantum of order that we have? And is it possible to share us that how many of these customers are all the repeat customers?
So, I just want to, if I can, I just want to make two broad statements on this before we throw numbers. One, we are single source at all the customers we work with, which also means our business is not, it's like the traditional fastener business we do. Our orders are not based on, you got a 10 crore order, 50 crore order, etc. Our business is based on being single source for the customer, and whatever volume they produce, we'll be shipping that volume accordingly. So if I give you a number X, it may not be relevant, or I can, for example, I can say a number. Let's say in a fastener business, maybe your order book is currently in the range of 1,500 crores. So similar philosophy will apply to the EV business also. So I think that's one thing to keep in mind. And you had one. What was the second question again? What was the second part of the question again? Customers. Whatever customers we have acquired, they're still in play. They're satisfied. We are growing with them. It's a new business, and I think repeat customers is too early to talk about. But having said that, all our customers are satisfied and growing with us. On top of that, we've been acquiring customers. Like I mentioned at the beginning of the call, we've had success beyond two-wheelers in the last mile delivery with customers like Swiss Mobility, Mahindra, and Volvo Eicher. Very over to you in terms of in terms of orders values. So I can say we are running multi-hundred crores of orders in our EV business. Multi-hundred crores. Jerry?
Yeah, no, I think thanks, Atul. That kind of covers it. As Atul said, the products, it's not a matter of a repeat order. Once we get a business award, and I think we've shared in the past that we have 11 business awards or areas where we have started supplies. And obviously there are 40 other customers that we are engaging with. Now, once we get a business award, as the company's volumes progress, we progress with that. And we can share with you the customer projections, which are very optimistic. But that's what they are. Companies that are doing 10,000 units today are talking about 100,000 units next year. But that's the industry. Now, as Atul said, we're because of the fact that our MCU has a huge software component. It ties up with, it interfaces with the vehicle control unit. It interfaces with the battery management system and so on. So it's not something that the instrument cluster. So it's not something that you can swap out one day. There's a complete vehicle software rework that needs to go in. So eventually, I guess customers will have dual sources. That they will require that for business continuity. But as of today, we're single source, and if you just look at the projections that our customers have for their volume growth, that's the projection that we have.
Okay, that is very nice to know that, sir. The second thing I just wanted to know is, companies, doing a lot of localization for all this new EV product, and you had done some modules already, and you had a target to complete some again during the current year and maybe beginning of next financial year. So I just wanted to know, when you have put so much of efforts for that, what is the possible savings for the company by doing the localization?
So, you see, first of all, I mean, it's not a VAVE exercise. This is a compliance requirement. The government requires us to localize, because otherwise our customers cannot claim FAME 2 benefits. Okay. So that's the first part of it. The second part of it is, compared to a China supply chain, the savings are not huge. We get some savings, but they're not huge. We have to keep in mind that all electronic components, the complete BOM. I mean, if you look at what we sell to a high-speed scooter customer, I mean that may have 700 electronic components in it. There's nothing made in India. All of that continues to be imported. It's just that the value addition is being done in India. The population of the PCB, the manufacturing of the mechanical components, the assembly, the test, all of that, the software customization, that's what we are doing. But as far as the electronic BOM goes, that's 100% imported from USA, Europe, and China. I mean the suppliers could be a TI or a Chinese company or from wherever else, but I mean these are all coming in from overseas.
Okay, so what you are saying is, whatever the major part, that is the electronic hardware and all, that cannot be localized as of now, and the rest, the mechanical or the software localization, all that has been done by the company. Is that understanding is correct?
That's correct.
Okay, fair enough. Sir, it's good to...
If I can add to that, Jaideep,
yeah.
If you allow me, if we can add to that. See, the current infrastructure or the capabilities in India for making electronic componentry, this not only applies to motor control unit, what we're trying to do, it could be government's PLI scheme for mobile telephony. I think that will have a cascading effect. I think there's a lot more infra and capacity coming in, more pure electronic componentry. And as that happens, we will be able to localize them. Currently, India does not have the capabilities in these sectors for local manufacturing, but they are going online as we speak, and every quarter, every year, you'll find changes in that, and that's the key objective of the government's PLI initiative in this segment, because we currently run a very negative import bill on such products. So yes, that's the current status, but it's not the status quo. I think we foresee a tremendous amount of localization happening in that area.
Okay. So my next question is regarding the EBITDA margin. It was nice to know that company has achieved the EBITDA positive for the EV segment. So no, I know once you pick up more and more value, this margin will keep going up. So what I want to know is, in case if you want to reach around 15% type of margin, so what should be the turnover from this segment to achieve that? And based on the current demand, how many years will it take to reach that level?
So, I think the EBITDA margin in the motor control unit business is not purely dependent on volume. Yes, some volume has an impact on margin structures. It's also a function of the kind of capabilities we add in our engineering room, the kind of products and services we offer to our customers, and the design capabilities we have there. And also, lastly, if you're able to localize more and more as we go forward, if you're able to, and as the capabilities in India keep on improving in terms of more electronic components being manufactured out here. And lastly, I would say it's a function of, with the rupee parity vis-a-vis the dollar or the RMB is. So it's a combination of various things. But having said what I said, we believe that we can reach double-digit numbers. It's very early in the game to talk about what kind of EBITDA numbers we'll have on a normalized basis. But yeah, we see visibility on 10%, give or take a few percentage points, So I think our focus today is to grow revenue profitably, and acquire customers, increase market share. That's our objective in the next 12 months. And then we'll probably work harder after that to improve our margin structures. We just need to do a lot more investments today, both in terms of people and capabilities and technology and customer acquisition. But having said that, despite that, we're in the range of 10% currently, and definitely as we get more mature in a couple of years' time, those numbers will improve.
Atul, if I may add, just to pick up on a couple of key words that Atul used, we are in the investment phase. Our 40% of our total manpower today is in engineering. That number will increase to over 50% next year. Actually, it will increase to over 50% this year itself, by the end of this year. So we are not only being driven, and I can tell you that engineering resources in this segment are not cheap. And so as we are increasing volumes, it's not that all of the margin drops straight through to the bottom line, which is what would happen in a traditional business. As we are continuing to invest very heavily in engineering, we are using up a lot of that extra margin or the incremental margin to build the capabilities for the future. So please think of this as an investment for the future. Think of this as an engineering business that requires the upfront investment, and that is what we are doing.
So that I understood that it is still a very early stages of business. But just wanted to know, because the way you are growing in this segment, maybe in the next 3 to 4 years, the revenues from EV segment may be same or may overtake our regular business. So just wanted to know, by that time will we have this double-digit type of margins in that?
That's our endeavor. We want to get. That's our objective too. But that's 2-3 years out. Current, like I said, our focus is on customer acquisition and revenue growth and market share expansion.
Okay, fair enough.
Sorry. And the other thing I'll also tell you is that because of the structure of the business where it's engineering heavy, it's a business that even at lower margins, it's a very high ROCE business. But that's how we've designed it. That's how we look at it. As we look at investment decisions at the board and in the management committees, we obviously want any investment that we do to add value for all shareholders and all stakeholders, and that means that we will deliver comparable results in terms of EBITDA, in terms of ROC, etc.
Okay, fair enough. So a lot has already been discussed about the new product that you want to look in the EV segment. What I don't want to repeat the same question, but what I want to know is, in whichever the product segment that you would be going or concentrating as of now, do you have the technology for that, or will it have to be a JV with some MNCs or so?
So I'll say that our strategy that we have developed is that while we are building up engineering capabilities to do this, we believe that in the initial stages we want to import technologies. We want to have technology partners. We want to be able to bring the best available technology and then to further work on it and customize it and make it more cost effective or whatever else. So the short answer is we are looking for technology partners, and we do not plan to launch products initially with our own technology, but to build up our own technology once we've launched the product, understand the market, understand the customer, the Indian use case, etc.
Okay, that's very nice to know. And lastly, on our regular business, I know the substitution of EVs may take more than 10 years depending on the segment that we are looking at. But the way things are happening, I think the exponential type of growth can be seen in most of the segment. So just a clarity on what is that management thinking about the old business? Will it sustain some type of revenues every year, or will it keep going down? What is that company has some type of I don't say vision, but what do they think about the fasteners business going ahead, maybe after 3 years or 5 years?
So we still find a lot of runway for growth in our fastener business. It goes back to a longer discussion we've been having in earlier calls also, wherein the penetration of electric vehicles will happen in two-wheelers and three-wheelers and public transport and last mile delivery. But for that penetration to pick up for passenger vehicles and commercial vehicles and the tractor industry and the off-highway, and our fastener business operates in all the segments. That penetration in those segments is little way off because of infrastructure issues, technology issues, pricing issues, etc., etc. So there's a lot of. We believe that we still have a runway for growth beyond 3 to 4, 5 years. I think it's early days to talk about doing any kind of limitation on that. We still want to grow faster than the industry in that particular segment. I think we operate that business very well, have great customer profile across different segments, across all segments, and we want to strengthen that position we have going forward. It's early days to talk about, from our perspective, on what's going to happen to that business and whether we should limit any more capex. But we rather focus on the growth in our fastener business organically. At the same time, we are putting in a lot of capabilities. If you see, the bulk of the call today is the conversation is more around electric vehicles. We had started that exercise 3 years ago. We have realized that opportunities will come in this space. We started doing early investments 2, 3, 4 years ago by looking at products, technologies, etc., where it could be offered for customers. So we want to grow both the businesses. And having said that, the EV business segment will grow much faster because it's a new green area as an economy, and we are making headway. We will grow both concurrently. But EV business will grow much faster, so we'll have a larger consolidated revenues as we go forward.
Okay, sir. Thank you very much and wish you all the best.
Thank you.
Thank you. The next question is from the line of Sonal Gupta from L&T Mutual Fund. Please go ahead.
Yeah, hi. Good morning and thanks for taking my question. So just on the EV business, I just wanted to understand in terms of localization roadmap where you are. I understand that like you mentioned, the things like chipsets will not get localized, but in terms of your overall localization and engineering roadmap, I mean, how do you see that over the next couple of years? And then related to that, essentially, I mean, because like you said, there are a lot of competitors and everybody wants a piece of the pie. So, I mean, what do you think you can do to sort of, fortify your moat in this space?
Atul, do you want me to address that?
Yeah, please.
Yeah. Okay. So I think first of all, let's talk about localization. As I mentioned, first of all, we have a huge portfolio. We go from 1 kilowatt, which is for the low-speed scooter, to 200 kilowatt for heavy buses and trucks. And obviously, we can't localize everything. But whenever we start, a customer gives us a program. They award us a program based on a commitment for localization. So we can sell samples, we can sell 5 pieces, 10 pieces, etc. But when they get into production and they want to be able to avail same to benefits, we need to commit to a localization schedule, and that we then adhere to. The localization means all the mechanical components are localized. It means that we do the PCB assembly in India. We do all the software customization in India. We work on the CAN development, which is how within a vehicle, the controlled area network, which is how the different parts of a vehicle speak to each other. We do that development in India. So there's a lot of activity in India, but like Atul just explained, with ICs, MOSFETs, even resistors and capacitors in SMT formats are not available in India right now. So that's the localization plan. In terms of capability, we continue to build up our software and hardware capabilities in India to be able to do modifications. Nearly every customer requires some level of modification. I mean, there's a lot of software modification that takes place, which is, even if a customer says limp home, which is a feature that many companies offer, every customer has a different meaning of limp home. Some means that you can ride the scooter home. Some means you can walk along with the scooter. Some kick in at 30%, 20% of battery capacity less. Some kick in at 10% of battery capacity. Whatever. I mean, I'm just throwing out numbers. So all of that is done by us, and we continue, as we mentioned, we continue to develop capability to do our own designs in the future, to be able to meet the requirements that our partners may not be able to meet, which may be more India specific or whatever else. So there is a plan to be very self-sufficient in both technology and capabilities within the limitations of what is available in the ecosystem in India in terms of components. I hope that addresses the localization question. As far as competition, yes, there is competition, but I like to always mention one thing, that the interesting thing about a new industry is that everyone's new, right? Maybe some of our competitors have 100 years of experience in the auto industry, but guess what? They have 3 years of experience in EVs or 4 years of experience in EVs. Our partners have 10 years of experience in EVs. We have 3 years of experience in EV. So, we don't get overawed by some of our competitors, though they have incredible lineage, as it may be. Also, Atul mentioned in the beginning that we are at about 50% market share in the high-speed scooter segment. We are at about 30% market share overall in the scooter segment. Now, we're not going to be able to maintain those numbers. That's for sure. Our market shares will drop. But look what's happening to the market. If the Indian two-wheeler market, and let's just talk two-wheelers, let's not even get into three-wheelers and LCVs and new products and all of that. If you just look at the two-wheeler market and you assume that the two-wheeler market goes up to 25 million in, say, 3 years, which I think is a fairly reasonable assumption. Even a 20% penetration, which I think is not outlandish at all, considering how things are going right now, is a 5 million piece market, a 5 million EV market in India. Look at the numbers today; it's not outlandish at all. Even if you can get 10% of that market share, 15% of that market share, we're talking 500,000, 750,000 units. 500,000 units is basically 500 crores, round numbers. 750,000 units is 750 crores. So, so the potential is there. I mean, it's about, yes, we got to compete. Yes, we got to do a good job, but that's what we are here for. So, the competition will come. Yes, we will lose market share. That's a part of the evolution of the industry. But I think that our first mover advantage is huge. The investments that we are making put us into a very strong position. And the market, the overall macro trends are very positive.
So if I can add to that, Jaideep, yes, so we are getting a lot of wins in terms of customer acquisition. We are where we are currently single source. That also means that we are also not getting some wins in some customers. As the industry evolves, and as there is second sourcing, so we'll have opportunities coming from those customers where we haven't got success today. So all that will open new doors for us. We'll have a lot more experience. But the biggest takeaway, like Jaideep said, is We have the first mover advantage. We were out there first in the market. We understood the market better. We have made the investments required to do that. And more importantly, we are making huge investments in our engineering capabilities, which is both substantially people and testing and validation facilities. I think that gives us a lot of pole advantage in terms of I think we are a little ahead of competition where we are, and that also enables us to offer certain products and services and pricing where our competition may be struggling right now. So we believe that we have a tremendous amount of growth coming our way in multiples of top line growth.
Thank you. The next question is from the line of Manish Oswal from Nirmal Bang Securities. Please go ahead.
Yes, sir. I have a question on this fastener business. So in terms of price action, we have done completely, and the reflection of that thing in profitability fully reflect in the profitability, or the quarter 3 will see further impact?
Can you repeat that question? I didn't understand that, Kenny.
I'm saying, sir, in fastener business, we have taken certain price action, right? So the impact of that in the profitability has been completely reflected in this quarter, or quarter 3 will have some impact of price action?
So I think there's always a certain lag. We have taken whatever we were able to conclude with customers. So I think there is still some benefits yet to be translated to the numbers you have seen.
Okay. The second point, sir, recently the Hero launched their two-wheeler electric two-wheeler in Jaipur. So any conversation, anything where we can supply something on that side?
Jaideep, you want to take that?
Sorry, I couldn't understand that. Could you repeat that, please?
Sir, recently Hero MotoCorp launched the electric two-wheeler in Jaipur. So they plan to increase the volume over the period of time. So any business we can expect from that, or how things? What is our position on that?
So Hero MotoCorp is not a part of our customer list right now, but obviously we are in discussion with them to be a source for future models, or a supplier for future models.
Future models and eventually second sourcing also.
Okay. Thank you, sir.
Thank you. The next question is from the line of Rajat Sethia from iThought PMS. Please go ahead.
Hi, thanks for the opportunity. Sir, what would be our current market share in the fastener segment?
So we play in one segment of fastener industry only. Just to give you stepping back for a moment, segments are industrial fasteners, automotive fasteners, and we are just working in the automotive fastener segment with automotive applications across passenger vehicles, two-wheelers, commercial vehicles, farm equipment, off-road, etc. We believe in that fastener segment, on the automotive space, our market share is close to about 30%.
Okay, thank you so much. And sir, we mentioned that we will target to grow faster than the industry. So in this segment, so is it like we are launching new products, or there is still some scope left to garner market share? How will that happen?
There is still scope to garner market share on the back of our product and engineering capabilities and capacity availabilities, and I made that statement keeping in mind the pipeline of new product development and programs we are currently finalizing and negotiating with customers across the board.
All right. And so the next question is on the growth outlook that we are giving for this segment. So is it like we get advanced schedules from the clients that we have the visibility for the next year as well?
No. Okay. See, I think this ties into the question where we were asked as to what's the order value like, order book like. Yeah. We have our order book in our fastener business I can't. I would say close to 2,000 crores, because let's say customers like Maruti or Tata or Mahindra or Honda, etc. They give us purchase orders which are open in value. This means they're all dependent on the kind of production levels where they have that for a particular model for that month, and we know what's our share of business for that product range, for that model range, and based on that we plan our production, our supply systems, etc. So next year is too far out to talk about, but we have visibility for the next couple of months. If the market changes dramatically, the numbers ramp up, suddenly there's a huge uptick in the two-wheeler consumption, customers are buying two-wheelers off the shelves, all these customers will ramp up their production volumes, and automatically we are able to grow at the same time. So principally our endeavor is to meet customers' needs as per the productions, but at the same time grow faster through increasing our share of business and developing more products as we go forward.
Sure. And sir, is this also possible to replace an existing supplier in any of the products that we operate in, or that's nearly impossible?
No, that's an ongoing procedure. That's an ongoing process. But it's not easy to dislodge a competitive player completely. It takes months and years to do that. But we work, at each customer, like at Maruti, we will do close to 200 SKUs. We try and focus on a particular set of SKUs to increase our share of business or add more SKUs. So taking our entire competition out, it's a very difficult thing to do, and that's not our endeavor either. Our endeavor is to grow faster than the industry, increase our share of business incrementally, and add new products in the portfolio incrementally. We don't look at radical solutions to grow our business by adding a large sum of value of business, because then the customer pushes you on pricing. So we are also margin sensitive. So we want to grow on a healthy basis, grow our revenue on a healthy basis with sustainable margin structures, not bump up revenue for the sake of revenue itself.
Sure. And sir, in the fastener segment, 30% of our fasteners are engine-related fasteners. Is that understanding correct?
No, so I would say 30 to 40% would be in the range of engine, transmission. Those are the two critical categories of components being used in automotive industry. Then you have chassis and other standard parts coming. So criticality is more in engines and transmission.
Sure. And so just one last question on the EV side. So right now we also have products for CV. Earlier we were making products for two-wheelers. Now we have CV. We have also added CV, right?
No, we made 40 years. Yeah. We've been working with commercial vehicles. Are you talking about the fastener perspective? EV perspective?
Sorry, no. The EV segment.
EV segment.
Yeah.
Jerry, want to take that?
Yeah, no. So, like I said a little while earlier, our partners have a complete product portfolio. Earlier, we had only localized and we were only promoting the ones in the two and three-wheeler segment. Now we have got business, so we are promoting in the commercial vehicle segment also, and we are now starting the localization work. So yes, this is a new development where our business from essentially mostly the light commercial vehicle segment, which is very exciting for electrification.
Okay, understood. And we will be launching in the PV side as well. I mean, we'll be looking to add that also in the near future.
Right now we don't have a plan on that. It's something it's one of those future opportunities we look at, but it's not a part of our current focus.
And the reason for that would be smaller market size right now, or something else?
I mean, there are smaller market size. There's a dynamic. I mean, if you look at the Indian auto space, PV, you've got the market is dominated by Maruti and by Hyundai, Kia. These companies do have a preference for suppliers from Japan and Korea. So while we've had engagement with them, we recognize that the development is going to be done in China, in Japan, or in Korea, and at least for the first few years, they will really rely on their suppliers from their own from their family companies or group companies. As far as the Indian players go, Tata Motors have their own subsidiary which has a motor control unit platform. Mahindra we are in touch with, but that's a fairly small part of their business. So it's more to do with the market dynamics and the constituents of the market than anything else.
If I can add to that, Jaideep, if you look at the Japanese, I think we need to break the PV industry into two segments, Japanese and non-Japanese. I think the Japanese between Suzuki, Honda, Toyota, Nissan, etc. put together, they probably have a market share close to 60-65%. And I think the Japanese are going if you see the product launches also, they're going the hybrid route. They are not following a full battery electric vehicle route. I think that's the route they want to follow, and that's what they're doing internationally also. It's only the Koreans or the Chinese who are launching a full battery electric vehicle. So the passenger vehicle segment is a lot more complex because the use case is very complex. It's not a simple segment to look into. It needs a lot of work. The customers have to do a lot of work. The infrastructure has to do a lot of work, and more importantly, the government policies have to change to make passenger vehicles more price competitive or viable for the consumer to use them. So having said that, I think full electric vehicles in the passenger vehicle space, with the trends we see right now, are still a few years off. You'll have successes coming in small numbers from Kia, Hyundai, or BYD or MG. But the dominant players are going hybrid route. We are working on products for these customers as well. They are under development right now, but at an early stage, I think we still have time to go out to the market to do that. But we have so much in our kitty right now in terms of the segments we are addressing, which is E2-wheelers, 3-wheelers, last mile delivery, public transport, commercial vehicles. We want to capitalize on the opportunities in the short term and keep an eye as to what's happening on the passenger vehicle side.
Sure, sir. Thank you so much for the detailed answer, and wish you all the best.
Thank you.
Thanks.
Thank you. Participants who wishes to ask a question may press star and 1. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Well, thank you once again, everybody. Thank you for your time. I think we have started this investor call initiative this financial year itself. We hope to be communicating more and more with you in the coming months and years, and hopefully we'll be able to share with you good news each time we speak. But I can only reinforce saying that we are on a good wicket. Both our partner business is doing very well, as you've seen, but I think more importantly, our electric vehicle initiative is extremely well. It's given us a platform not only to grow with the product we have, but also look at another products as we go forward. And we believe in the next 2-3 years, our revenues from that segment will be very large enough, maybe over time coming very close to our fastener business. So we have exciting times coming ahead, and we look forward to your support. And if you have any questions, you please free to reach out to me or Pankaj or Jaideep at any point of time.
Thank you.
Thank you.
On behalf of Sterling Tools Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.